What is up, everybody? Thank you so much for opening this video. This is Trading withCentia. Welcome to my channel. If you're new, please hit the subscribe button and let's be a family. So in today's video, I'm going to be showing you guys how you can analyze using the top-down analysis method. So this video was requested by Mashon Birthright. So I hope I pronounced that right. I'm going to be doing this video for you and other traders out there who want to know how they can do top-down analysis. So basically, top-down analysis is about starting from the higher time frames to get the bigger overall picture of the market, to get the whole view. Is the market on an uptrend? Is it on a bearish trend or not? So yeah, let's get into it. So I like starting on the daily or the weekly, but in this case I can see a clear picture here on the daily. So this is AUD USD daily time frame. I see that this is an obvious uptrend, right? And the way that this is obvious, you can clearly see that the market is moving in a corrective manner and impulsive manner. We can clearly see here that the market has clearly been moving on an uptrend, and it has been respecting corrective structures as well as impulsive moves. Okay, so then let's first find our trend. You can see here we have an uptrend. Beautiful. So this is a valid uptrend because we have confirmed 3 rejections on this support trend line. All right, so making it a valid uptrend. And the way this is so simple, you guys, you can see that the market wants nothing else but to move to the upside, but we can only confirm that with more confirmations than just using the trend line to confirm this move, right? And another thing that we realize here on the daily time frame is that the market clearly respects corrective structures. It respects when the market creates patterns. And what do we have here? We have a corrective structure and a corrective pattern right here. And what we will be looking for is a breakout of that pattern. If the market doesn't respect this trend line, we would expect something like this. We have a level right here. We would expect, obviously, the market to break underneath this level and not only retest this level, but it's also testing our level of confluence, which is the level and the trend line, and then push to the downside. All right. But remember, we never want to go against the trend, and it's clear that the market is moving to the upside on an uptrend. Now we want to see how can we enter, when can we enter, or where can we enter. That is where you move to your lower time frame. So I'll check out the 4-hour first and see if is there any possible entries right here. And as you can see on the lower time frames, the market has already rejected. That is where you can see that, oh, the market is clearly moving to the upside because we have rejections right here. Look at this level. All right, this is a level where market is failing to break out of. And if you take a look here, it has reacted as a resistance before, and then finally now it wants to react as a support level. So it's respecting this level of support that was once resistance, and also at the same time respecting this pattern right here. As you can see, these touches, it's a major level of high confluence. All right, look at this, it's respecting so much. That is why it pushed to the upside drastically. And so now we want to enter. Is it the right time to enter? No, because you don't know, especially with a small account. We might have a drawdown right here where market is kind of rejecting for a little bit, you know, until finally it decides to push up. We don't know what the market might do. So that is why we continue to move down to the 1-hour time frame. As you guys can see, we are moving from the top to the down. That is why it's called a top-down analysis. So now we have a clear vision from the daily. We saw that the market is moving on an uptrend. We saw that the market was currently within a corrective structure. And now we see that on the 4-hour time frame, the market has rejected our trend line, has rejected moving further downwards, and so we want to enter the market. We have a clear vision of what is going on. So when can we enter and what can we do to enter? Now we see that the market has broke a clear trend to the downside. This minor descending channel was broken, and then finally market shot up. All right, so what you can do is you can place your levels right here, obvious levels here in the market where the market was clearly rejecting. So we'll adjust to obtain multiple touches here. As you can see, this was a resistance, and then finally a breakout. We'll also mark a few other levels right here that we see that market might respect. There you go. So now market can probably move up until here to touch this level of resistance and respect that level, and then maybe come back here to test this level that was broken, because this level was never tested. So if it comes back down here, this is where we can probably find an entry. All right, and so this is also the 1-hour time frame. When you see here, we also have a valid trend line, because as you can see, we have 1, 2 touches. We might be looking forward to a third touch right here. So that is why the market might come down to this level to test the trend line and also maybe test this zone level. All right, and then that is where you will be waiting for rejections, and once you finally find your rejections, you can enter for your buy. You can buy, and well, these levels that I set up here, you can use them as your take profit. You can use them to scale in. You can use them for exits and all of that. Your first take profit will be here. And if you want to hold until market finally breaks out of this corrective structure, you can move your stop loss from here, because probably you would have placed it around here. You can move your stop loss to your entry point, right? Just in case the market decides to come back down again, and you can break even. After moving your stop loss to here, this level where you entered to your entry level, you can just leave the trades to run. And then whenever you come back to your charts to check if whether the market has broken out of this level, you can move your stop loss to profits and lock profits and protect your profits and just let the trade be. So that is what you can do. If you want more tutorials on this, make sure to DM me, WhatsApp me, Telegram me. I have given you every possible way to get in touch with me down there on the description below. If you found this video helpful, make sure to like the video, subscribe if you haven't subscribed, if you haven't subscribed yet. Subscribe if you haven't subscribed yet. All right, I need you to subscribe and like the video. All right, so guys, thank you very much for opening this video. I hope this top-down analysis was helpful to you and everyone who's watching. Thank you, love and peace.